Hello, champions. In this video, we're going to talk about a concept called selling to breakpoints. And this is a great kind of sales technique that you can use to increase your business. And the first thing I want you to do is when you're talking with clients, I want you to call them discounts. Now, I'm not saying never use the word breakpoint, but maybe when you're explaining it or when you're showing it on the screen, it's going to say breakpoint, whether on American funds or on our calculator. But when your normal conversation, start calling them discounts. Start explaining that as you invest more money with an A share, that the upfront sales charge gets discounted. You're getting a discount. It's supposed to be 5.75%. That's the normal expense to get into this fund. But we're going to give you a discount. So that's the first thing. Second thing is, one of the ways to use it is related to a video I did recently on small accounts, where I was talking about if you're going to do small accounts, I insist, or you should insist, that you add a monthly draft to it. Both that's good for the client, it's good for you, it's recurring revenue. They get to do dollar cost averaging. And basically, don't take a small account. The problem is, how do you define a small account? Everyone's different. I think one of the easiest ways and simplest ways in your mind to define or label an account small is if it doesn't hit the $25,000 breakpoint. So this is where those two philosophies or these two techniques can kind of coincide, which is, on one hand, you're saying, listen, my goal as an advisor is always to help you save money and also reduce the costs. Save money long-term, but reduce the costs. And so the breakpoints or the discounts are something we need to be shooting for. There is no discount at all until you hit 25,000. So one of the things that I always recommend my clients is, if you do an account where the family has their accounts together in aggregate less than 25,000, meaning none of their accounts are hitting that breakpoint, then we want to add a monthly draft to it, an automatic monthly draft, because that'll actually help them get towards the breakpoint. Okay, so that's the two philosophies together there. The big one really is this, though, is you want to on a very conscious level, you want to be explaining to clients, teaching clients on how those breakpoints work, what the breakpoint numbers are, and obviously what the discount is. And believe it or not, though they're very simple to understand, 25,000, 50,000, 100,000, 250,000, 500, 750, million, there's actually breakpoints above a million. At the same time, they can actually get a little bit complicated. Even I have to every once in a while call American funds and kind of get a refresher. So for example, let's say one of the breakpoints is at 100,000. Let's say your client currently has 90,000 with you at American funds, and they're going to write a check, or not write a check, but they're going to do a electronic transfer from their checking account, a one-time transfer to the American funds for 12,000. Well, how does that work? So the 12,000 will put them over the 100,000 breakpoint, right? By $2,000, 12,000 plus 90. But at what breakpoint does that 12,000 go in on? Does it go in under still the 50 to 100,000 breakpoint? Does it go in on the 100 plus? Or does 10,000 of it go under, or 9,000 out of 99 goes under the previous breakpoint level, but the amount that's, the $2,001 goes into higher? Which way does it work? Or can you get the whole thing at the breakpoint, but you have to send in a separate letter of intent? I actually know the answer. The point just is that it starts getting complicated. Does the account value count towards the breakpoint? So let's say same client has 95,000, doesn't add any new money, but the market brings it above 100 to 101, and now he writes a new check. But he never actually added 100,000, but the account value went over 100. Does that mean that new money is now at a breakpoint level, or is it only the principal you put in? Or what if it goes above, let's say it's 110, and he's at that breakpoint level, he's getting ready to add money, and the market drops down to 98. So now when he puts the new money in, it's actually below that. Does the company retain the previous breakpoint level? What if he took the money out and puts it back in? So it wasn't the market that brought it down. My point is, all those things, they get a little bit hairy. You don't have to memorize it. You don't have to explain to the client perfectly, but you just got to know that it does get a little hairy. And so you want to sometimes call. They actually have a separate department at American Funds that handles just breakpoints for these exact kind of questions, because they can get kind of hairy. But I will tell you the good news about this. American Funds is very lenient. They will almost in every case go to the benefit of the client. Now, what they won't do is, the 13-month letter of intent, they actually want, if you're a day over, you're done. And the reason they do it that way is because it's not fair to other people that have to hustle and try to get the money in. If you guys know what I'm talking about, the letter of intent. So anyway, I just want to say that you need to learn how to do it. But here's what you want to do. You want to know at least what the basic numbers are, right? 25, 50, 7,500, 250, 500, 750 million. You probably will end up memorizing what the upfront sales charge reduces to. But the calculator's right there. I got it on my phone, a link to the master spreadsheet. Boom, it's right there. I look it up all the time. And you want to be looking at your clients' accounts on a regular basis. And you want to see who's getting close to a break point. And then you inform, hey, listen, right now you realize you have 230, your account values between the husband and wife and the kids is 237,000. You're only $13,000 away from the next break point, which means once you hit it, now anything after that, especially if they're already doing drafts anyway, anything after that is going to be at, whatever the break point is, 3%. I can't remember what it is. That's awesome. And that'll be for the rest of your life unless you take money out. That means all your monthly drafts going forward will be at a lower. So that's what I mean by selling to breakpoints. Because one of the keys in this business, of course, you want to increase your client base, but people mistake that phrase as just meaning adding more clients. It's not. A big part of your business is getting more out of your clients and getting more for them, right? This is one of the great businesses where the things that you do for you to generate income is 100% great for them. It's even life insurance can't say that, because with life insurance, the client has to actually die to afford it to work out. But investments and securities, different from car insurance and health insurance and life insurance and other financial services, is good no matter you live or die. I mean, everybody benefits from it, right? It's so when I say get more out of a client, it's for their good. If you can get a client to add the extra 10,000 that they kind of didn't really want to, but now they are because they're going to hit the 100,000 break point because they got 90 already, you're doing them a service. It is added $10,000 into the world's great companies. So you always remember that. And also during your early stages of your presentation, maybe not even the first visit, but somewhere earlier on, you need to walk clients through the breakpoints. You probably at the point when they ask how much it costs and how it works, you explain how A shares are the best way to get into an investment. You pay up front, and then you're done for the rest of your life, at least for that amount of money that went in. And then you walk through the breakpoints, because I promise you're going to have some clients go, oh, well, you're telling me, so if you have $1 million, there's no upfront sales charge at all? Like it's completely gone? Like, yeah, man, but $1 million. And that counts husband, wife, and all the kids? Yeah, as long as the kids are under 25, they count too. And it's all the accounts, right? Yep. And all of a sudden you can see the wheels turning and you realize that they got more money than they told you they have. And now they're starting to think about it. Now, maybe it's not $1 million, but maybe it's 100,000. So you want to, number one, make sure they always understand that day one, really walk them through that. Okay. And again, you're calling it a discount, because if you don't call it a discount, then if they can't meet it, they feel like they're getting ripped off. Right. Where when I explain to them, I say, look, understand the normal price is 5.75. It's just starting at 25, we give you a slight discount. And I'll be very honest with you. You know where that discount comes from? They take it out of my commission. I tell them that. So that comes out of I don't even say commission, but I say it comes out of my income. American Funds makes the same amount of money. They're not going to pay their managers any less money. The discount comes in that, but I make it up because now it's more, in other words, investing 30,000 with the discount, I make more than investing 15,000 without the discount. Right? That's what I tell the client. And I give them some kind of broad number like that. So you got to make sure they do that. Number two, or I already said this, but make sure you watch their accounts, and as they're getting close to a break point, you have to follow. They're not going to follow that. They forgot about the break points. Okay. You need to make sure that they understand that. And encourage them constantly, not constantly, but every time you talk to them, or at least at the annual review, but I would do it more often, especially when the market goes up, which drives account values up, you want to be selling to those breakpoints. The last one I'm going to give you is a specific technique that I use actually all the time. And that is, many times clients will they'll just ask a fun question. They'll say, okay, if you had $1 million, what would you do? Or something like that. You won the lottery, what would you do? Right? Clients ask you things like that. Or sometimes I'll just bring it up to make the point about how much I believe in American funds. But one of the lines I said, tell you what, let me say it this way. The best deal, and normally I don't like using the word deal, but in this case I do. The best deal in the investment industry ever is investing $1 million or more in the ICA A share. Because you get into the best investment demonstrably in the history of the human race. There's other awesome investments. We put you in all three different funds, but one of them is the ICA. The best management company at zero upfront sales charge, at 0.6% annual expense. That's all in. That's every single cost, 0.6%. And you get me for free. It's the best deal in the industry. You couldn't make it up this good. And so now what this has to do with today's session is about the breakpoints, because at $1 million, there's no upfront sales charge. By the way, you still get paid 1% upfront, plus the trail starts in the second month, not 13th month, the second month. So you get 1% upfront. So that'd be $10,000 of revenue of GDC if it's exactly $1 million. And then the trail starts. Now, you're not going to walk into it that much, and 10,000 is not that much, to be honest, right? $10,000 of revenue, but it's better than zero. So that's just, so that one line, $1 million ICA A share, you get best investment, best management firm, dirt cheap expense, and you get me for free. You got to add that on there. That's important. You get me for free, because you can't do that any other way, right? You do an index fund, you're not going to get the advisor unless you add an advisory fee on top of it. Okay? And that's all fine to do. There's nothing wrong with that. But I'm just saying, from a context of the best investment from the best management company at the absolute best price, with an advisor at no charge to you, the company pays me directly. It's incredible. So that's all. The key there really is the $1 million breakpoint. That's the key. So there you have it. Selling to breakpoints. Learn them. Teach clients about it. Encourage them to add more money to their accounts.